Ladies and gentlemen, welcome to another cryptocurrency video by yours truly, Tommy World Power. Sorry for keeping you guys waiting on this video, but I've been doing a good amount of analysis on my own, and I figure it's a good time to share with you guys. It's not 100% complete, but I'm just at a point where I know you guys will be happy to see this. As always, this video is not investment advice, so do your own research on anything you guys do in the crypto space, on this analysis, anything at all. But yeah, I think you guys will definitely like this. So let's jump into it here. So what I want to show you guys here is I've been working with a statistician named awe_and_wonder on Twitter. So feel free to give him a follow if you haven't yet. I was looking to do this type of analysis and found him, and he's great to work with. And we've done some good analysis on the market. Things that probably we all should have done quite a long time ago, but nonetheless, it's good to have an understanding of this going forward. I imagine in the next bubble, many people won't be analyzing things in this way, and they definitely should be. And I was looking at things a lot in the realm that I should have been, but didn't quite get it to the level I have now. And I think it's quite valuable. So let's just jump into it here. So what I'm showing you guys first here is some analysis that I had done that I haven't seen anyone in the space do before. It was kind of in my mind, but it just wasn't quite refined. But alas, here it is. So what are we looking at here? We are looking at basically the amount of months the cryptocurrency market was overextended throughout its history. You guys might have been familiar with Tralalalo's chart, and as I've said for years, it was the best analysis I've seen in where the cryptocurrency market's at as a whole. And we've kind of rebuilt this and adjusted some things on it. But so this is that chart. We've recreated it. You can see it here. And then, of course, here we have the months overextended. I'll talk about them both here. But so this chart should look pretty familiar to you guys. For those of you guys who aren't familiar with it, what we're looking at here is this is a logarithmic regression chart. This would essentially reflect the fair market value of the cryptocurrency market as a whole. This is a total market cap, which actually Tralalalo used to do it for Bitcoin, and I told him he should do it for the total market cap. So, and here we are recreating that here as well. But I wanted to have these updates done more frequently for myself, which is why I wanted a statistician. And now I have that. So I want to mention too, this has been a powerful lesson for me, guys, being in the cryptocurrency space, going through this bear market. It's been a while since we had a bear market. It was 3 years since the last bear market. So I kind of forgot the pain that goes into it, but now I'm starkly reminded. And that's just how life goes sometimes. You guys, sometimes you need a lesson to be repeated in order to really understand it. And it was the same kick in my butt, by the way, that got me into cryptocurrency. I found Bitcoin in 2012 when it was $10. I didn't get in. I saw it go into its first bubble, $100, and I didn't get in because I was waiting for it to come down more than it did. And then it was when it went to $1,000 in 2013, that was my kick in the butt, and I never took my eyes off crypto again. And this was a kick in my butt to really pay attention to where the market's at. And so I really want to instill that in you guys too, how important this is. We've seen the cryptocurrency market decline 90% over the past, since January, past 9 months or whatnot. It's been brutal. We should all be paying a lot of attention to this, and that's what I'm relaying to you guys here. So hopefully it's helpful to you. Let's jump into it a little more here. So, and I reflect back on my notes, we can see here the market was pretty decently overvalued, and you actually can see this dotted orange line here. This shows you where the red line was at various other times throughout. So this was actually summer 2017, and you can see the market was, based on the data we had then, was actually pretty overvalued. But I correctly felt that the market was not over. I was waiting for the market to go parabolic, which it did. Unfortunately, I was just distracted at this time. But any of you guys have been following me, you might have seen me tweet or talk about my videos how I was looking for a 10 or 20% gain every day for about a week or 10 days, and that's exactly what happened. Unfortunate, I wasn't tuned in enough to be conscious of this parabolic rise. And that's another big lesson I want to share with you guys. There's a lot of noise going on in the cryptocurrency space in times like this. I suppose especially a bit for me as YouTuber or whatnot. So I was not as conscious, paying as much attention as I should have been. Again, lessons learned, right? But now this has been again a kick in my butt where I am paying a lot of attention to this, and will continue to, essentially on a weekly or bi-weekly basis going forward. So yeah, I'm just sharing a bunch of lessons and thoughts with you guys. I feel like you guys would appreciate these thoughts, because again, a 90% decline is a big deal, you guys. If any of you guys had, say, if it went up, your assets went up to say $500,000, and then you have a 90% decline, goes down to 50,000. That's the difference between you being able to be free and travel the world and live cheaply, to the point of not being able to do that and whatnot. So this is really, I can't emphasize this enough, that paying attention to where the market at is extremely important and very overlooked in the space. Again, I don't see people doing this type of analysis very frequently, if at all. It's generally technical analysis, but I think paying attention to a bigger macro level and the growth rate and the logarithmic regression analysis that we're doing here is a very strong way to go. And it proved itself once more in the last bubble that we experienced. So, all right, let's zoom in here a bit better. So let's see what I want to talk to you guys about. So here's one major thing to notice here. What we experienced from January till now is we experienced the fastest rate of decline in the cryptocurrency space ever, in relation to how many months overextended we were. This is something that I've been playing around in my mind for a while, but you'll actually notice in the last bubble, and the last bubble crashing was also brutal, but this bubble crashing was unreal. I actually just did a little picture to show it to you guys a little better here. This is the rate of decline essentially after the last crash, and this is our rate of decline. Again, this is months overextended in the cryptocurrency space. So what this means again is, at the point that we hit our peak in January, we were almost 3 years overextended, meaning the price would have to stay at that level for 3 years. The valuation and the market cap of the total cryptocurrency market would have to stay at that level for 3 years to be considered fair value by the logarithmic regression data we had at that point. And that is definitely overvalued. It should have been a major indication point for us to sell. And then again, this last bubble was just full of lessons. The next thing that happened is we had an extremely rapid decline. Look at that. So I think many people in the cryptocurrency space got caught with their pants down, basically. This extremely rapid decline didn't really give a lot of people confidence or whatnot to sell. Then we had a bump here. This was around May 1st, and this was another exit point. But again, just a very rapid one and a very small window of opportunity. So you really had to be paying a lot of attention to capitalize on that. And then once again, just a rapid decline. So this is what we faced since January till now. It's now September 29th as of the date of making this. And that is a very difficult market. But, a very good learning experience if we extract the lessons to be gained from this. I think that's the major takeaway here, which is why I'm making this video. So, you can actually see here on the logarithmic regression line, something I was playing around with mentally for a while, is we extended just about as far above the regression line, but this is the main takeaway. This is where I led the analysis with On Wonder here, is looking at how many months overextended. Why are we almost, I won't say quite twice as much, but why are we significantly more overextended months-wise in this last bubble than the 2013 bubble, even though they're just about as far above the regression line? And the reason is because the slope is decreasing. It's a decaying rate of growth. And so that's what we need to pay attention to going forward. The next bubble that happens, the slope is going to be even less steep in the next bubble. So we need to be conscious of that going forward. All right, so I wanted to show you guys here too. Again, another thing that we should have paid attention to, let's see here, was, the rapid, here it is. Okay, so again, the parabolic rise. So this is the market cap of the last bubble including Bitcoin. You can see this is the parabolic rise we had in January, the final kind of parabolic rise. And here you can see on the altcoins, just very clear. It's so important in a bubble to be really tuned in and paying attention. You can see it really went parabolic from it just, and it's not over a long period of time, just about a month, mid-December up till early January. And these are points that we should have been paying close attention, determining when the market's overvalued to find a good exit point. So I'm not perfect, you guys. I didn't, obviously hindsight's 2020, and I was distracted by a lot of noise and whatnot, but that's just part of being human. Again, and I didn't get in Bitcoin, the first at $10, I didn't get in 100. That's just how life goes. But again, the value is extracting those lessons, which I seek to do in experiencing any kind of failure. So yeah, so let's, I want to show you guys something here too that's pretty cool. So you can see here, as again, the months overextended declined. What happened here, what I'm hoping to happen in the cryptocurrency market here soon is we've had such a rapid decline in how overextended we are. I want this to kind of decrease in how fast it's declining, which I think is likely considering how fast we've declined thus far. But you can see here, even though this doesn't look that good, like the market's still the undervaluation is still going on. What actually is going on in the market here is the market is actually, I'll show you, it's stabilizing. That's right around January 2016. So or January 2015. Here's the period of rapid decline as seen here. And then here's what happens when the decline is still going on. What's going on is the price is basically stabilizing, but cryptocurrency should be growing pretty rapidly, and that's why you see this. So you see a less of a slope, and so that's what I'm hoping happens here. It's also a stabilization. So I'm hoping we get to the stabilization period. I don't feel like we have that much. Again, given how fast we've declined, I think we're definitely due for a period of either a rebound or stabilization. Of course, it's impossible to know what the market will do, but given what has happened and the history, I think that is reasonable to expect. Hopefully, it's the case. We shall see. All right, cool. So this month's overextended chart's pretty cool. This chart shows you how fast I had On Wonder make this a monthly growth rate. I like to look how fast the cryptocurrency market is growing on a monthly basis. So that's how I've been analyzing things. Roughly, I was looking at about 7% per month, and you can see that here, 6.1%, and it kind of varies based on what chart you're looking at. Altcoin chart, I'll get to this one in a second. And I'm going to try to move through this stuff as quickly as I can. I want to keep it going. So this is a good chart to be conscious of, be aware of for the future. And I'll try to give you guys updates of these time to time. Here's the, again, total market cap regression line. And a good thing to keep track of. We are a bit overextended in the market still. This chart was made just about a week ago, but nonetheless, we're at about quote unquote fair valuation of the market based on this logarithmic regression. So something to be conscious of. I had a chart made of the Ethereum regression line, and the reason why I did this is because I feel Ethereum is going to experience more growth than Bitcoin in the coming years. And this just ties to some of the other stuff I've mentioned to you guys, the difficulties with Bitcoin, the transaction capacity. I know there's Lightning and there's other scaling solutions perhaps being worked on, but those things require adoption too. It's almost like a whole new blockchain or a whole new technology, maybe like a DAG or other solutions. Those things have to gain adoption. And although they're riding on the Bitcoin brand, I don't think that's just given that adoption will happen. However, Ethereum does exist, and Ethereum has some of its own transaction capacity limits, not nearly as severe as Bitcoin, but this is an interesting chart to look at. Something to consider is this chart does not have as much data as Bitcoin. So I don't actually fully agree with this chart, but it's going to give you guys some food for thought. Again, this dotted orange line is where this red line was at different periods of time. So here, for instance, it would have been sloping, something like that. this adjusts based on new data coming in. You can see how the dotted orange line catches up to the red line at the current date. But what this chart shows us is, based on this chart, Ethereum is currently undervalued. And if I were to say anything, I would say this chart is actually too conservative. I would say Ethereum is actually even more undervalued than this chart reflects. And my thought process behind that is, I think in the next bubble, Ethereum would hit $5,000 or more, assuming the next bubble. Yeah, I mean, pretty much any time the next bubble happens, I would expect that to happen. So say it happens in 3 years from now. If you go forward 3 years, this chart would put the fair value of Ethereum probably somewhere around 1,000 or so, and to hit 5,000 it would be significantly overextended. I don't think so. I think the chart would look something a bit more sloping this way. It should have a steeper slope still and a faster monthly increase. It's saying Ethereum is growing at 5.64% per month, which is slower than the total market cap, which it's saying is growing at 6.1%. So I don't think this is fully correct. So that's something to be conscious of. But also to be conscious of is, over time, these graphs tend to deviate less and less. You can see here's the dotted orange line, and it's gradually becoming closer to the red line. So as we gain more data, this becomes generally a better fit for the growth pattern of cryptocurrency. You can see here early on there was a lot of deviation, and I think the same thing will happen here with the Ethereum regression line. But just something, again, the big takeaway here is Ethereum is is undervalued based on this conservative chart. So all in all, I would say it's very undervalued right now. Ethereum at $200, very undervalued. Those of you guys, come check out this video 3 years from now and be like, man, I wish I bought Ethereum when he made that video. It's gonna happen again. So yeah, so Ethereum's a safe bet. I would say very confidently, assuming the technology continues working, which is proving itself over time and increasing adoption with ICOs and other use cases. So I would add to this too, the fundamental analysis aspect of this as well supports it too, which is we currently have about 30 million users in the cryptocurrency space. Over the next year, it about doubles every year. So over the next year, we would expect to add about 30 million more. I think it'll be a little less because bear markets tend to attract less people and bull markets tend to attract more. But even if we add 20 million new people joining the next year, where are they going to go? They want platforms that are easy to use, that are cheap and whatnot, and there's just not room on the Bitcoin blockchain for growth. But Ethereum, there still is room on their blockchain. They have about 5 times more transactions than Bitcoin, or in terms of capacity or so, with their gas limit currently. And that can increase over time as well. It's not as hard and fast as Bitcoin, which doesn't want to increase it at all. And then Ethereum, of course, is working on other scaling solutions right on the blockchain, which I think is a lot more powerful than scaling solutions that are not on the blockchain. Anyhow, so I anticipate a lot of growth to happen in Ethereum over the coming year as well, which would give it a lot of support in the price too. So the next chart here is the altcoin time deviation and market cap regression. Here's the time deviation one. And again, here you can see we were quite overextended in this past bubble, another thing we should have been paying attention to. And here's the market cap regression. And it's interesting to note here, again, how far overextended the altcoin market cap was on this graph. I think this graph actually too might be a little conservative. We could very well be, I'd say, at about fair value for the altcoin market cap or undervalued. So, and it's important to note here, the correlation isn't as strong. We've got an R-squared value of 0.8, which for those of you guys who don't know, 1 is the highest, 1 is an extremely strong correlation, and 0 is no correlation. In fact, they would say there's no correlation even around 0.3 or so, or very, very weak correlation. Here you can see the correlation, the R-squared value on the total market cap. And this one actually was a pretty strong correlation on the Ethereum, but I think this is going to adjust. I think this one's definitely going to adjust a bit. But yeah, again, just more good data. And I'm analyzing this and exploring it in more ways as I look at it, but I figure it's time to share this with you guys. I felt like you guys would be happy to see it. So that's why I'm sharing with you. So, yeah. But yeah, once again, here's an interesting thing to consider is how fast, again, how overvalued the altcoin market cap was in January and where we've got to now. Whereas the total market cap was about 680% overvalued and declined to close to fair value. So the altcoins have just been hammered, as any of you guys who've been holding altcoins know. So yeah, we've got hammered, and I think that again, hopefully these slopes start to decline a little less steeply and we can stabilize. And that there is a silver lining in this, you guys. When we get to the stabilization period, great things can happen. Here's something to consider. Oops, I don't know what just happened to my chart. Okay. So I don't think my editor is on it, but okay. So to show you here, once we reach this period of stabilization, basically right after we started stabilizing, you see the bump here. What this is it's Ethereum taking off from $1 to $10. So the silver lining in this, you guys, is if you guys are in good cryptos, then I was in Ethereum here. Even in a period where stabilization has just started to happen, or even potentially in a bear market, good quality cryptocurrencies can do well. And so that's something to consider. I wonder if I have another way to show it to you. Anyway, you can look at a chart of Ethereum at this period if you want to. It went from about $1 to $15 or so and stabilized around 10. But that's what this bump is. Let's see if we can show it to you on the regression chart here. Here we go, January 2016. This is Ethereum getting a nice pop here, and you can see how it was a huge move in the altcoin market. And so you can see here on the deviation chart, it was going down the whole basically end of 2013 all the way down to, it's about a year. From the year of 2014 was a brutal year in crypto. Not so different, actually this year, 2018 was worse, but it was somewhat similar. But then at the end of 2014, actually 2015 too, it was still going down. But then 2016, we had a nice pop there. And you can see the market was still undervalued and it stayed undervalued. And here it's actually going, it's deviating more from the regression line, but the price isn't going that far down because, again, we're expecting growth. So anyway, sorry, I'm a little all over the place on that, but I think you guys got it. Let's take a big picture. Let's take a big picture look at this then. And I think the big picture is the market still needs to stabilize. We are still in a downtrend. We haven't got to the stabilization period. I know some people are jumping out on social media, calling the bottom, and it could be, but what I want to see is I want to see the market stabilize. I want to see a couple months of the market cap staying pretty stable. Meanwhile, the time deviation could still decay a bit. That's okay. What I really want to find is some stability, though. That stability will give us confidence in the market, will bring confidence back to investors, and then what would eventually happen is we'd start a gradual bull market, or who knows, market patterns rhyme, they don't necessarily repeat all the time, but at that point it would be reasonable to expect a steady incline. And you can see here the period of mid-2015, basically the year of 2016, going into 2017, early 2017 was a time period of gradual increase in the market. It was a nice period. Again, interesting to observe that the undervaluation remained constant. We were still the same amount under the red line here over that period, even though we're increasing up. You can also see that on, again, the time deviation. We were undervalued at this level, but the price was going up. And so that's what I'd love to get to. What I'm looking forward to seeing in the market is that stabilization and then gradual increase. One last thing I would mention for you guys too is once again, I feel like in this growth, it'll be altcoins that are going to dominate. I felt this way for years against a lot of other people who were pretty well spoken at the time, but I think that altcoins are going to dominate. It's still a pretty controversial opinion, but so far I've been proven correct in that. Altcoins are expressing far better technology and development, and I think that's going to continue going forward. I think scaling solutions, smart contract platforms, these are things not to be underrated, that sadly there's still a lot of people who think that smart contracts don't have a place in crypto, or don't have much of a place, and I think they have a massive place in cryptocurrency, and and scaling solutions that are built into the technology are also critical, not relying on essentially a layer 2. I want to see those built into the cryptocurrency, whether that's the blockchain or a DAG or other technologies like Pascal Coin SafeBox is also cool. There's a lot of scaling solutions. So that would be my takeaway there, is consider that I think a lot of this growth we will see will be in the altcoin market in the coming years. So that's it for the video. Hope you guys like it. I know it was a little longer, but try to keep it as short as I could. Be sure to give it a like if you guys do like it. Share this with your friends, anyone who pays attention to the cryptocurrency market and wants a good idea of how to look at it or where it's at. Hopefully this is helpful to them too. And wish you guys the best. I'll see you on the next one.